Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals, and gold prices have had one heck of a wild ride this week. Recall earlier we saw gold prices trade down to new year-to-date lows yesterday on not only on the tariff news from the president, but also on new Fed Chair Powell's testimony to both the House and the Senate. And it just seemed like gold had lost its luster. Yields were going higher. Stocks were going lower. Not kind of, they were going lower. And the market just seemed to be very upset about whether it was Powell's testimony or whether it was Trump's tariff announcements or whether it was the economy, or there's a lot of things that it was, but gold was not finding any favor and it got pushed down to new year-to-date lows. Now the dollar was bidding, so that seemed to go hand in hand. The dollar going higher, gold going lower. Looked like speculators were getting squeezed out, and there just seemed to be that big move that was momentum shift that looked like we were going to go down. And then lo and behold, on Friday, we see a big move higher, about 20 bucks higher in gold, with the idea that one, the dollar got hit, and two, maybe the uncertainties out there, gold might be a good safe haven. So there was a late week rally. Despite the fact that we did put in a new year-to-date low. So things turning around back to neutral. I won't yet call gold bullish, but it's back to neutral, and it's starting to gain a little favor. It'll be interesting to see the positioning change next week after such a fluid week of higher highs, lower lows, and then kind of settling back in the middle. And lastly, let's look at these tariffs, the tariff talk. Obviously, that's going to increase prices, which would be inflationary. Obviously, it could be dollar negative, which would help gold as well. But I think we're seeing is a lot of people looking back to the 2002 Bush tariffs on steel and how the market reacted then. And we saw, you saw a huge move lower in the stock market. You saw the dollar get thumped, and you saw Treasury yields go down pretty significantly. We saw that initial knee-jerk reaction this week. However, stocks went down. The bleeding has stopped. The dollar, which rallied at first, came back, but it's kind of in the middle of where it should be. And Treasury yields, while they started to go down, sort of stopped going down. They've sort of upticked again. We're going to settle Treasuries about the same place we've been settling over the last month at about 286. And I think that right now gold is going to find favor because of the safe haven, because of the fact that, yes, the Fed rate hikes are already priced in, but there's still a lot of fiscal woes in Washington. And the idea of uncertainty on the rise keeps coming to mind when we heard from new Fed Chair Powell speaking to Congress, to some of the data we're getting, whether it be pending home sales, new home sales. It just seems that there's too many things moving around that aren't moving in the right direction, and gold is going to find favor in those. The dollar as well will continue to get hit with the idea that Asia and Europe are getting their acts together and are starting to see continuing to see their currencies outperform. That is also going to have a negative impact on the dollar. So gold finding itself back in neutral territory. We could go back into bullish momentum next week, but we need to see a pushback. I think we need to get gold back above 1330. We aren't quite there yet, but we're getting there heading into the weekend. This is Todd Colvin coming to you from the floor of the CME Group.